A fraud scandal in Minnesota should not matter to the $36 trillion United States bond market. But it does. Because US debt doesn't trade on just the maths alone. It trades on the intrinsic trust. And when that trust cracks, even locally, it exposes something much bigger about how the entire system is being held together or not. By the end of this video, you understand why a state-level fraud scandal matters to global bond investors around the world, and why confidence, not deficits, is the real risk inside US debt. So, what happened? In Minnesota, federal prosecutors uncovered what they described as widespread, systematic fraud across multiple publicly funded programs. The most prominent case involved the non-profit Feeding Our Future, where prosecutors have alleged over $250 million in federal pandemic aid was fraudulently claimed. It became the largest pandemic-era fraud case in US history, with dozens of indictments and convictions. But that case didn't just stand alone. Investigators expanded it into Medicaid billing, child assistance programs, housing and autism service funding. Federal officials now estimate hundreds of millions and potentially billions of dollars were improperly claimed or diverted. Now, this triggered FBI and Homeland Security involvement, emergency audits, Treasury scrutiny of payment flows, temporary freezes on some federal disbursements pending verification, which I would have thought was going on already, right? This wasn't just fraud, it was a failure of oversight at scale. So why does this actually matter beyond Minnesota? Because I'm sure Minnesota is a lovely place, but quite frankly, we wouldn't really be talking about it if it didn't have wider implications for financial markets and investing and our portfolios. Because on its own, a few $100 million doesn't really scratch the surface. It doesn't even move US debt markets. There's debt desks and sovereign desks here that trade billions in a day. It doesn't really move the needle. But markets don't actually respond to pure dollar amounts. They respond to the signals, the liquidity figures, the reaction functions, right? The signal here wasn't that, oh, some money was lost. The signal was, if this can happen so visibly, so audaciously, with such temerity and lack of oversight, how much of this actually happens invisibly? This is where the trust comes in, or the lack thereof, the erosion of trust. Trust is the real collateral behind US debt. The United States now carries over $36 trillion of it. Yes, it continues to borrow at rates far below what most countries with similar debt levels could sustain. But why? Well, because US Treasuries are treated as safe. Good as money. Return on investment, no default risk, no counterparty risk. They're liquid, they're institutionally reliable. That reliability is not guaranteed purely by law. It's guaranteed by belief, confidence, because investors assume funds are accounted for. I don't know, weirdly they assume that. Oversight functions exist, systems work under stress. That belief is what allows deficits to compound without immediate punishment like they would do in the banana republic. You can't do it in any other country, you can only do it in countries like America. But once that belief actually weakens, the pricing completely changes. Because we've seen this before when markets already price confidence, not just mathematics. When US sovereign credit was downgraded, yields rose, not because the US had defaulted, but because confidence was questioned. Bond markets price risk premiums when governance looks unstable. Oversights look weak. Political or institutional control appears fragmented like it does in America right now. The Minnesota scandal didn't just cause a bond sell-off, but it adds to a growing narrative. Okay, what do we see when we do the calculus of whether or not to invest in America? We see deficits are rising probably. Debt servicing costs are climbing. vertiginously, oversight failures are becoming very, very visible. Markets don't wait for the collapse, they adjust way before it. And there's some shenanigans going on behind the scenes. I'm talking about like circular funding between voters and politicians, and it's all very, very bad, to be honest with you. But why do local failures matter to global investors? You might think, it's Minnesota, what do I care about that? Well, if you're a foreign central bank, a pension fund, sovereign wealth fund, you don't just analyze the balance sheets, you analyze the institutional credibility, shock horror, the governance quality, not very paradoxical when you think about it, operational control. The Minnesota case became national news because they weren't actually hidden. They showed a few things: how easily federal money was moved and abused and trafficked, quite frankly, how weak verification processes actually are, how long fraud has gone undetected. That doesn't change the maths of US debt today. No, it by no means does it do that. I'm not saying that. But it does raise the questions about control tomorrow. And once investors start asking those questions, the bond market becomes less and less forgiving. Because there is a wider, much bigger, much more material, monolithic problem in the US debt market. Because there's an uncomfortable truth. US debt only works as long as the system is trusted to work. They don't care about being loved, they're not admired, but purely trusted. When scandals expose oversight failures, even at a state level or a local level, they chip away at that trust. The danger isn't the defaults. The danger is the repricing. Higher yields, shorter maturities, less patience during the stress. That's how confidence failures actually show up, quietly, mechanically, and late. Minnesota hasn't broken the bond market yet, but it does expose something very fragile beneath it. US debt isn't backed by gold. It isn't backed by surplus. It's backed purely, unadulteratedly, unequivocally, empirically by pure hardcore belief. And belief is the one asset markets can withdraw overnight. That's where the real risk, and that's what Minnesota has highlighted. It's not just a local case. When you juxtapose it on a wider context, that's where the true miasma starts to take effect. America needs to get its house in order because the bond market is splashing red. My name's Justin Badson. This is the House of Trade. Ciao for now. Good luck out there.